Shawn, let's start with you. I know that there's a lot of different, folks are typically familiar with their portfolios. They might have stocks and bonds, but let's break it down. What goes into building a solid income plan?
Well, we'll reach deep into the toolbox and start pulling some things out.
Or Shawn in his fanny pack. He likes his fanny pack.
They're coming back to the fanny pack.
They
Because he
are,
brought
right?
them back in style. Thank you, Shawn.
So we think of a risk continuum on the short end, low risk, low return, all the way up to along the continuum. But let's start with CDs, money markets, really safe investments that pay a pretty low rate, right? And you'd be surprised how many folks we meet that is one of their key sources of income that they have. When they enter retirement, they tend to, it's counterintuitive, but they tend to get too conservative. And when you factor in inflation, so even if right now, money markets are paying around 4% or so, historically maybe 3.5%. But when you take inflation out, which historically has been about 3.5%, you take some taxes out, because in most cases you have to pay taxes based on the accounts they're in, you're really at a negative real return. You're actually losing money very slowly and safely. But those investments do have their place in a financial plan, mainly with their emergency money. It's the right amount, 6 to 12 months of expenses, but it's there if they need a new roof on the house, an unexpected expense comes up. It prevents them from having to sell the other investments that are in their longer term financial plan, and therefore it plays a really important role.